This is Austin Real Estate Investing. Austin Real Estate Investing. We'll be discussing real estate investing in Austin, Texas, and bringing you experts from all different sectors of the real estate game. Your host, Jordan Moorhead, is a real estate agent and investor in Austin and is here to help you get started or to build your portfolio and explore new strategies.
Hi, this is Jordan Moorhead. This is Austin Real Estate Investing. Today we have David Thompson in here, and he's going to tell you all about how he's involved with real estate in the Austin area. Hey, David, how are you?
Jordan, how you doing? Great to be here. Thanks for having me.
Absolutely. Great to have you on. I know I've known you for quite a while, but I'd love to hear more about your story.
Sure. Absolutely.
So real quick, could you tell your guest who you are and how you're involved with real estate investing in the Austin area?
Yeah, absolutely. So I have a company called Thompson Investing, and we are primarily focused on syndicating multifamily apartments, 200 units and up, self-storage, mobile home parks, that kind of thing. We operate primarily in the Sun Belt from Phoenix to Florida, but specifically here in the Austin area, we've got 3 apartment communities, and in San Antonio, we also have 3 apartment communities, and we typically partner with operators who find these opportunities and manage them, create some value for our investors, usually value add type of properties. And then we're usually trying to get out of these in about 2 or 3 years and move on. And the operation team kind of focused on the disposition. My primary role for this group is educating investors on the market and the deal and the team, and bringing them to the table because these deals are large deals, right? So it could be 20, 25 million. We might need, I think typically the deals we've had around here locally have been around 15 million or so. So actively involved in those, and our investors like the market here. Obviously, Austin's on fire. It's hard to kind of find good value. So, but when we find one, we're excited about it. We usually get a lot of strong investor demand. Obviously as the jobs and population continue to move here in the Texas central markets.
Absolutely. So, David, when did you come to Austin, and what did you do before you got into real estate here?
Great question, Jordan. So I was in after graduate school, I got into corporate America and worked for 20 years, different companies, AT&T, and ended up in Dell. It got me down here in Austin in 1997. Worked for Dell for 15 plus years, and then I left and I retired from corporate America, I guess, in 2015, and I had my interest in real estate had peaked about that time. Well, a little earlier, around 2012. And my spouse and I were starting to look at, coming out of the last financial crisis, we saw some really good opportunities from short sales and some of the single family homes around Austin market, maybe Cedar Park and Round Rock and some of the suburbs that folks know. And we done really well with those. About 2015, we had a handful, but it dawned on me that, this is going to take a lot of more capital. It was a slower process, and we're fortunate we kept them because the market's appreciated dramatically. And every once in a while, when we have a turnover and we maybe spend too many weekends trying to get something fixed back up, usually a couple of weekends after that kind of wears off, I have to keep reminding myself that it's a great appreciating market. And I think we'll just hang on to these. So fortunately, my spouse likes to do the property management on them, and if we need the tough work, we'll hire out. But for the most things, we take care of ourselves, and she's a big part of that. And but around 2015, I noticed that the houses were becoming more expensive. I needed more capital at my job every year to buy one house at a time. So we tried our hand at duplexes and fourplexes in San Antonio, and didn't have success there. We had some different relationship issues that blew up with the builders and things on these. And so I kind of went back to the drawing board and said, I don't think we're going to cash flow very much more in these homes, but let's see if we can switch to get some mentoring in the syndication space. And that thing blew up pretty quick. And today I feel like, this is a space that I can do a long time. And we'll keep our do-it-yourself activity. I always talk to investors that like, well, do I have to do one way or the other? Listen, I think everybody has a do-it-yourself in them to some extent, and you could chuck it all and say, I want to be passive. Investor, and syndication is great for that. We can talk a little bit more about that, Jordan. But I think it's always great if you're in your local area, like we're in Austin here. Sometimes you become an accidental landlord. You have a house and maybe it didn't sell in the good old days, went maybe a little slower. And you all of a sudden decide you want to move into another house, and maybe you decide to rent this one, or a job takes you away and you decide. So a lot of people, become accidental landlords that way. And then they decide, hey, we'll try it. And not a lot of them stick with it. Some do. And of course, Austin in this market's been great. If you like it, if you like it and you're persistent, whether you're flipping or buying and holding, it's been a great market since about 2012.
Yeah, absolutely amazing market. And yeah, I do the same. So I own rentals myself, but I also invest in other people's projects. So I'll invest in syndications, but I own rentals here in Austin. I own other rentals outside of Austin.
Right.
It can be a great thing to do. What was your first rental property you bought? Was it in Austin here?
Yeah, the first, if you start talking about a program, a programmatic approach to it, like we're going to buy a house after a house, it was here in Austin. I had definitely owned a rental property before up in Sedona, Arizona. My folks were living up in there. It's a beautiful area. And they lived by and bought a new home in there and were telling me about some opportunities. So, but we didn't hold it very long. Unfortunately, we flipped it before the big crash. So we did make some money on it. So I was kind of intrigued by it. But yeah, when we moved down to Austin in 97, I guess I didn't really think it took a long time before I got into it. So 2012. So that's a long time here before I decided. I was just buying homes and we'd sell and move to another home. And, it's, I always tell myself the earlier, the better. And I got in earlier, but life has its way, right? Life has a way of telling you when you're ready. At that time, probably I was focused on my young family and not so much a second job after my main job. And I was pretty busy with Dell, traveling around the world and doing things. So that didn't appeal to me. But once I got into it, saw the opportunity, it really lit my fire like it does a lot of people.
Awesome. And what's your portfolio now here in Austin?
So we have, in the single family space, we have a handful of properties, a couple up in Terra Vista, up in Round Rock, a couple in Cedar Park. And then we got a couple homes over by 620 up in the kind of the hill country between River Place out there and Steiner Ranch. And we've just found, for the most part, very, very easy to rent, very easy to take care of. You want to be, near good schools, and we really haven't had a problem with the residents in that. And in the syndication space, we have probably 750 units, maybe 3 large apartments in the 250 unit category. One called the Baxter, which is managed. These are managed with my partner team, Wildhorn Capital here in. And we've got the property near Westwood High School called the Baxter that we bought about a year and a half ago. That's doing pretty well. Reserve at Walnut Creek, that's a property just north of the old Mueller area. And pre-COVID, that was it. And it still is a really great area. It's really exploding. It's where the old airport was, right? So there's a lot of space, a lot of new stuff growing in. And what I liked about that area is that you can get downtown, 10 minutes. You can be downtown in 10, 15 minutes. So, if you're young and you've got, no kids, or you're married and you've got a lot of energy, you want to get downtown a lot after work, or you can get there. Really, it's really accessible. COVID slowed that up a little bit, but they'll be back. And then we have one right down between the airport called Hawthorne of the District, between the airport and downtown. And it's surreal. It's like you're up on a bluff between that. It's like 5 minutes to the airport, 5 minutes to downtown. And obviously there's no traffic. 5 minutes. You can see the airport on this. You can see downtown from this knoll, and it's like, this property is on 12 acres. And we didn't put this in the business plan. Most apartment deals are like, 5-year holds. We're trying to get out of them in 2 to 3 years. That's when we've optimized the value. This property is sitting on prime 12 acres. So you're probably a mile away from Oracle's new headquarters there.
Oh, wow.
It is like, I could see an exit strategy, not just selling once you've renovated, selling it to another, maybe institutional group who just wants a prime property that they don't have to worry about. But you could also, that thing could also be raised perhaps, or you could, somebody could convert it into condos and raise it a couple more floors, or, because you just get a little bit above the skyline or the trees and you can see this beautiful skyline. And so we didn't put that in a business plan. Obviously that's a little bit more out there, but it's definitely a possibility as an exit strategy.
Yeah, I love that area. Really like East Austin too. I've lived in East Austin the entire time I've been in Austin. So
you're seeing dramatic moves there, and I think it's exploding everywhere. I mean, when I was in Cedar Park, it was Leander, and it was like, man, it's way out there. And now everybody talks about moving to Leander, or moving out to Buda, or moving out to Bastrop, and those areas are on fire. And it's just we've seen tremendous growth. I know I live out here in Steiner Ranch. You're probably familiar with that area. Mm-hmm. And my next door neighbor is a real estate residential broker. Oh. And there's 3,000 homes in Steiner Ranch. We're getting right next to Lake Travis, and he said there was only one home listing a week ago or 2 weeks ago when I saw him. Yeah. It happened to be across the street and down from us, like 2 or 3 houses. And my wife were out and walking. We saw him coming out the front door. There's a bunch of cars out there, and he's coming out. I'm like, this reminds me of what people are talking about when they live in the Bay Area. It's like multiple bids, multiple competition. I think he ended up selling that for $50,000 more than they listed it in a matter of 3 days, and that's not even uncommon anymore around here. What's our average inventory is down to half a month or less than a month. It's crazy.
0.4 months. The average time on market is 33 days, which is crazy.
Amazing. That's amazing.
That's from the day it's listed to the day it closes.
So so they're selling it on paper in a matter of 3 days.
Yeah.
So it's nuts. So for us, I mean, we love the lifestyle here, and we'll make this our home. Our business has exploded. We've done a lot of things. It's a boutique business. I don't have to, I can work out of the house. I don't have to be in an office or have a big team. I have support, really great support team. But we're flexible. My wife and I have done this business. We've raised capital. What I love about that business is we've raised capital on family trips from Iceland to Australia to Hawaii, wherever we are. We can always just take a few emails. If we had to do a call quickly, a lot of this business is done on email, text, and it's just a beautiful business. And so we've talked about where else we want to live. I'm like, I think just Austin's our home base. I love it here. Yeah. But it would be nice to go, hey, in a hot summer around August, maybe we're up in Denver in the mountains, for a month, and with internet we're fine.
And you can have internet pretty much anywhere in the world now. So,
right?
Yeah, you're pretty flexible.
Oh, it's crazy. I mean, we're walking down the street in Iceland after dinner, and I get a text from some investor. I'm like, back to having fun. And I just it's just amazing. You couldn't do that in the old days, and so I love that, the flexibility. But Austin's our home. My daughter went to UT here. My other daughter's at the University of Washington, but she's thinking about transferring back here too because all her friends are here. And I think after 2-3 months in Seattle, she got up there in January. There's no class on campus because of COVID, but she wanted to go experience it for 10 weeks. So she's subleasing a place with a friend of hers, and she loves the experience, but she just can't get out. Yeah. And someone told me I got several investors in Seattle. They said, if she can handle Seattle from January to March, then it's golden after that. So she said she already had 9 inches of snow. I'm like, that's pretty rare for up there. And of course, we got, I think it was the same system where we got our 5 or 7 inches, which is rare for us,
Very rare.
Yeah.
Well, awesome. So David, it sounds like, you started small and have moved your way up bigger. You took a jump at some point in time from smaller stuff up to the syndication spot. What initially attracted you to real estate investing? So you worked in corporate America for a long time.
I was definitely ready to get out of corporate America, whether that's 5 years, 10 years for some people, or 30 years. I mean, I think maybe 20 was a little bit long, but I had a great ride in the corporate world. I traveled all the world. I was in the supply chain, so I really learned a lot, and was international trade primarily. So I was being sent to all these remote locations. So I had great projects and wonderful people, really smart people working around me, good people. And so it wasn't that. It was just after a while, you just realize once you become an entrepreneur and you've been on that side, you're like, there's no looking back. Because the control of my time, I think, is the biggest thing that I underestimated. I just wake up. Well, I don't have an alarm clock most mornings, unless someone's, and I schedule it so people don't call me too early. I'm not like a huge sleeper person, but I just like to kind of get up on my own. My wife and I, we'll do some light yoga stuff in the morning together. We do, I can go to family things or we can do, I just mentioned we can travel anytime. I can just get up and travel, and I have to ask my boss for permission or I want to get 2 weeks or 3 weeks this year. What is that all about? So I think that's just the freedom and flexibility is the biggest thing.
Yeah.
And then the other thing is, if you have a big company, policy changes, things come down, you just have to react to them, right? A lot of times here, I have every relationship I have is for a reason and a purpose. And every meeting I have is for a reason and a purpose. And there's very few times I'm on a call or a phone call or meeting that wasn't purposeful and that I was kind of excited about and want to, have. And so it's not only flexibility with your time, but it's the right time. Like, you're giving yourself at the right time to the things you want to do. It is harder work, but because I love what I'm doing, this is a cliche, but I never really knew it either until you finally get into that dream world of what you're doing. It's not ever feels like work. I could be, sometimes my daughter walks by like, guys, put it away. Put your, go over here, put your computer in your office, get away, close the door, because we can kind of just keep going. And so that's the one thing you do have to guard out, make sure you do carve out the time and not get crazy about it. But for the most part, it never feels like work. So if it's not feel like work, man, you're working, you're giving it your all, and you see the rewards. And that's not always the case in the corporate world. So when I left, it was great. Why I left, we were starting to see that success in the single family space, but it was going to be a slow process. And I couldn't see myself doing that another 10 years, hanging on to my corporate job, saving $50,000, $60,000, go buy a house, do it again. So I took a multifamily mentoring course, and I realized after about 3 months, they were supposed to teach you how to buy your own apartment. And I realized it's a team sport, and it was going to be a lot bigger than I thought. And by that time, I had quit my job. I kind of finally decided, about 12 to 18 months, my wife kind of gave me in a nice way, like, go pursue this. But if it's not, what you want to do, come back to something that we can count on. And fortunately, after 3 months into it, I turned to my mentor, and this is the other thing that attracted to me. These two guys I met were in their early 30s, and they're trying to buy a 320 unit apartment in Dallas, Texas. And I'm like, I had kind of a finance background, interested in investing. I had never heard of syndication, really. I never had been exposed to it. I didn't know how you go even think about buying it. It never even dawned into my world that you can go buy a 300 unit apartment in Dallas, Texas. That would cost, that we had to go raise, $15 million or whatever. I'm like, he goes, Dave, if you're going to get into this business, I could use some help. And, so we did due diligence. We did all this stuff together. I learned, but he said, go talk to all the people that might be accredited investors. And so I did just like network marketing, right? It was like create a spreadsheet of everybody I knew, and I don't know, like 100 people or something in my life that might be, and like parents I met at a kid's soccer game, or just people. And so I got out there and I raised $1 million on my first deal, and I'm telling you, I've mentored like 30, 40 people since, and it's rare. I've never really met anybody that first time raised $1 million. It's done. It's not. And I wasn't bragging about it. I didn't know at the time. My mentor said, well, that's pretty good. And that was 13 investors. And then fortunately, that was a company that was just getting started. And so I did deal after deal after deal. I've now had 21 syndications with these guys. I've raised over 50 million with them. The company now, Thompson Investing, has raised over $150 million. We're in 35 syndication deals, and we've done that in the last 4.5 years or whatever. So we're on the pace. We probably do 8 to 12 deals a year. We have partnerships now beyond that original group. We probably have partnerships with 7 to 10 different operators, and we branched out geographically. We branched out different operators from a risk perspective and different niches. Self-storage, we added mobile home parks because I started researching, and I said, if I'm going to be dealing with investors, last thing I want is to have a lot of bad experiences for them. So I stayed in recession-resistant things attracted to me. And if I did all this research, it wasn't hard. The data was out there. The last 25 years, Jordan, it was like the apartments and self-storage mobile home parks was beating the stock market by 2x on total returns with far less volatility. I'm like, why doesn't people know about this? So that was really my mantra. I had a financial planning degree. I never used it in college. I tried it. It came out in a recession. I was 22 years old trying to talk to people with money. Didn't really work. It was all sales. I hated it. Hated sales. I hired a cold calling team. I don't even do any of that today. Today, it's all about thought leadership and group like podcasts and blogging and stuff like that. But my business is morphed now to 90% of the investors are return investors or referrals. And you can't get a better business than that, right? If I'm talking to referral, their buddies or their friends already had success, and they're coming to me and like they're already kind of teed up. They just need to educate them on what we're doing, how we work, how I can learn about them and help them. So this business is in a great spot. We probably have about 500 accredited investors. And we probably will bring, I don't know, on every given deal, I have a team now that I work with. We're now all licensed. So I supervise a team, and we'll bring $5 or $10 million to deals. Is really what we try to do for operators. We'll do $2 million if they need it, or $5 million, but we try to get more of the team involved. And I'm helping them grow a business, right? So they don't work for Thompson Investing. I'm mentoring them and helping them grow their own business. They have their own websites, their own name. Together, we're working to support the operator and get deals done. So the operators like us because they're like one-stop shop. Just call Dave and is this a deal that's interesting? And that's the business. I mean, I invest in every deal. I show investors. I walk the property. I was just in San Antonio, and we mentioned before we started our broadcast with the Wildhorn Group, was looking at a deal in Shirts, and we went down there. It's a 2008 good-looking property, but the interior is the builder built to kind of an A- spec. So there's an opportunity to upgrade now as this Shirts and the whole I-35 corridor blows up, and so it's a really good opportunity to look at this property and do some things to it. But we get involved. I mean, I'm not analyzing the deal, but I do look at the underwriting and make sure the assumptions are conservative. We share the conference call with our investors. We walk them through the process. We educate them how to get in the deal. And then once they're in the deal, we have our own website, portal, and I want this Venus flytrap approach. I want to have investors come to us and they have holdings over here and here and here, and they can see all their portfolio and distributions and all that. So yeah, it's a really cool business now. I love where it's at and excited about the future.
That's awesome. So yeah, you're providing people opportunities and just making their life easy after you've provided the opportunity is what it sounds like.
That's it. Passive investing is really, I mean a lot of people who love or really like real estate, or their friends talk about it, they just don't know how to go about it. I think we're basically, I always tell people when I send them an introductory email after they come to my website, my first thing is, we're educating you on why this space, why these niches, why would you want to be in commercial real estate? What's the expectation once you're in commercial real estate? You got some cash flow coming in. You're a passive. You get reports. You get money in your distribution, distributions in your mail, and not your mailbox. Well, you could get them in the mailbox. We prefer to put them right in your bank account, right? But it's really passive for you. But we do want you to know you're a limited partner. You are a partner, so you're going to get monthly reports and you're going to get updates. But if you just want to see your money come in and just make sure the money comes in the account and you're happy, you don't have to read my reports. You can just go about your very business, and we'll let you know when we sell it. And if we want to do a 1031 exchange, we'll let you know if we're going to do something like that. It's and then some of our investors they're a little bit more interested in and have questions about some of the deals that we're doing.
Mm-hmm. Yeah. And I think I try to tell people there's a lot of ways to invest in real estate. Obviously you've done the really active stuff and you still do this. And I think that's good to hear too, is you can still be active, but you can also be completely passive. And they're two completely different things.
Yeah.
You do them.
Yeah. That's a really good point, Jordan. And maybe if I didn't emphasize it, I think it's important. When I talk to investors, I never want to come up. It's easy to drink the Kool-Aid. It's working. It is working. I invest my own. I see my portfolio growing, and I love the tax benefits. I love the cash flow. I love when we sell. I'm like, all this stuff's good. And not every deal works out. I mean, but we haven't had any, in 35 deals that I am, we haven't lost anybody money. Let's knock on wood. Let's start there, because we are in good markets. We're with good teams. We're in typically conservative assets. Again, looking at the track record, these assets don't fall apart. We've looked at these in 2007, 2009, and the single family home. This is data from Fannie Mae, Freddie Mac. Single family homes, 4.5% of the single family homes across the country were over 60 days delinquent in paying their mortgage during that financial crisis, 2007, 2009. And for apartments, it was less than 0.5%.
Wow.
So if I'm looking at it, and that's data I can produce and give to any investor, it's like, if I look at that, to me, it tells me and I own single family homes and I'm not selling them, but I'm like, it tells me they're almost 8 to 10 times riskier. And why is that? Well, if it's a really down market, and you're in a bunch of houses, and you have a lot of supply and low demand, then it's harder to get renters in there, or you have to lower your price or whatever. In apartments, because those homes are, they've got one family income or two families or two people income. That's it, holding that house rent up, right? But with apartments, you've got 200 or 300 families. So we'll see occupancy drop from 95 maybe to high 80s in Dallas during 2000. We got the data from CoStar. It shows in the markets that we're in, we dropped 7-8%. Worst case.
Oh, wow.
Okay, we can go down to 75% and break even in occupancy. So there's a lot of cushion there. I'm not saying every deal is going to work out, but there's a lot of cushion to get through. We saw COVID. We saw operators go from monthly distributions to quarterly, cut it down to 4% for 7 or 8%. But everybody understood it. There's a moratorium going on. Operators wanted to conserve capital. We don't want to do a capital call. So they did the right thing. We want to take care of the residents. We want to be responsible if they're late on their rents. What are kind of payment plans? You want to be sensitive to that. But we are running a business. But at the end of the day, I went through the hall of COVID, and we're still in all these properties. No one has not paid. We haven't had one property. We're at probably 25 apartments in a variety of markets from Phoenix to Florida, many here in Texas, Central Texas, and we really haven't. We're going to get out of this, and I'm not worried about that. I don't lose sleep at all about that. If I had a single family home in Austin, I don't worry about that either. But I mean, in 2007, 2009, in some of these markets around the country, you might have been worrying if you had some single family homes, right? That's an interesting point. The other thing I want to touch on is in Austin, if you're living in Austin or wherever you're living in, you have a lot more understanding of your environment. And if you want to start out flipping homes or buying or wholesaling or buying single family homes for buy and hold or duplexes, fourplexes, all that stuff, for your listeners, I mean, that's all great because you're here. You kind of know where the areas are, where the good at bad areas, where the gentrifying areas, where you might be able to catch something on the upside.
Yep.
Now, if I told you, okay, do that same strategy in someplace in Florida or someplace you've never been to, you don't even know, is it possible? I'm not saying it's not possible, but now you're increasing your do-it-yourself energy. You got to have a team. You got to really take trips. There's a lot more energy going on. What if I said, go buy self-storage or mobile home parks or even apartments? You're like, I know some investors doing really well in that space, but that's where syndication comes in. Syndication comes in because you can identify experts who are in those markets, who just do those niches. At the end of the day, just complement what you're doing. You can still do both, but don't try to do something you're not expert at, or do it on a small scale till you get better and partner with experts. That's what I did. Partner with experts to avoid making mistakes when you're a rookie, right?
Absolutely. Yeah. No, I think that just like you said, there's low risk ways to do each strategy, and then there's higher risk ways. I'd say the higher risk way to invest passively is just pick a name and invest with that person. You don't know anything about them, and you don't do due diligence on the operator. That's high risk to me. Yeah, single family or duplex, if you just invest in a market you know nothing about and don't have a team in, that's really high risk to me.
Right. Yep, that's exactly right.
So David,
you hit it around the nose.
I know you've done a lot of deals both in active real estate investing, which you manage and own, and then you've done a lot of passive deals. What's something you would tell people to avoid? So a bad deal you've been in and some lessons you can pass along.
Yeah, we just it's funny because every time I about 10% of the deals that we offer every year are alternative assets. Your syndication deals, they're alternative assets, but they are in higher risk areas. I have not offered this to my investors, but I invested with some partners that I do know, but the operator we don't know very well, in a hemp farm up in Colorado. And the returns on this were like, 5X. You get your money back in 100% in 1 year, and then you just sit back and, it's all, you're playing with Vegas money after that, right? And so this big, well, the first year the crop failed, or they had enough failure that nothing really happened. They had a bad seed. But no, when I got the pitch on the operator, and actually the partner had actually invested with him in cannabis, but they were switching over to doing some hemp. They were very sophisticated operators, but I didn't realize how many variables can happen in agriculture. So kind of value add agricultural play. They were taking potatoes and farms and turning them into hemp farms. And the story was beautiful. They even had an active buyer ready to buy the product. Everything was beautiful about the story, but I'm not sure that's going to work out or not. And I didn't syndicate the deal, but I'm in the syndication. I just had a factoring business with a syndication partner. And we just had to send an email to investors. We're going to close the fund. They're going to give us 90 cents on the dollar. We're going to get all our investors' money back and give them 5% for 1 year. So like I said, we're never going to lose money. That's the goal. And we'll come out of our own pockets to make our investors whole. But when I go back and I look at all those things, it's really the operator that I didn't know a lot about. And it's an industry that's very, there's a lot of things that could happen to make things go wrong. And almost to a deal, the sexier it is, the higher risk it is. And you can pretty much bet that it's going to probably give you some sleepless nights. So the older I get, I've been doing business, 30 years investing since a teenager, 30 years plus. I had stock investing clubs I've run. We've had very success in that. If I look at all this stuff, I just wrote a blog on this. I think to me, I get more conservative as I go forward. I love apartments right now. I mean, other things work, but we even found in mobile home parks during COVID, we had to lower because that demographic is getting affected by service jobs displaced because of COVID. And service jobs go away. Yeah. Our B+ apartments in A- areas, higher salaried employees, high tech, they didn't get affected. We had two economies going on. Mm-hmm. So I keep thinking all the time in my investment strategy, how do we lower our risk? Because it's at the end of the day, it's about capital preservation. And I see maybe too many investors trying to shoot for the moon. And I think if you talk to older investors about all of their investing over 30 or 40 years, I bet you they will tell you. They may tell you about some home run they had or everything. But if you really look at it, it says the investment I didn't touch that was kind of plain and boring, but just consistently getting like 10% a year, and I always get my principal back and lived another day. And if you could just get 10% for a long time and get tax benefits or low double digits, you can do fantastically well. But think about this. They always say in the stock market, the stock market gives you like 10% over like 30 years or whatever, beyond every 20 years, look at a stretch. It's like 10% return. But if you look at all the analysis, they do with investors, what happens? In reality, we touch the money. We do things with it. When it's high, when it's going up, like GameStop here recently. When it's high, people jump on. Yeah, people jump on, and then it crashes, and then they lose money. And they don't buy it when it comes all the way down. It's like really hard to buy a falling knife, or it's hard to buy something. And so the more I do these kind of deals, you just got to really be careful. What sounds really cool, and they always say too good to be true, but even a 20% or more return doesn't sound too good to be true, but it probably kind of is, right? There's a lot more risk there than you probably know about. So if you're going to go in that direction, I would just say make sure it's an operator that you know very well and has had a lot of success in that, and then put a small amount of money in it. That's what I would tell you.
Yeah, and I agree. A lot of the good investments are really boring. If it sounds really sexy and attractive, the Bitcoin's a really good example right now.
Yeah, mining farms. Yep. Bitcoins and Bitcoin mining farm. I even have a business partner who wants me to raise capital on a Bitcoin mining farm. And I was talking to my wife the other day as we were driving back from that San Antonio property. I'm like, I'm pretty sure I can go raise a couple million on that with my investors. I have a certain amount of investors that might like to put a little bit in, and we'd lower the minimums just to, 50,000. I don't want. Someone wants to give me 400,000 for that, I'd probably talk them down. I don't want that responsibility, but I'd be like, hey. So we were debating that. I know it's there to taking, and the returns for me as a partner and getting involved would be pretty significant. But I'm like, I just, it's not really worth it. It was kind of cool. When I got in the business a few years ago, it's kind of like, that's kind of cool, interesting. I want to really diversify my investors. And the more I thought about it, I'm like, what's really working? It's value add B+ apartments in A- areas. Workforce housing was working a little while there. It'll come back. But, it's self-storage, mobile home parks and apartments. That's pretty boring stuff. But it's not boring when you see the returns. over and over and over again. And I don't have to have too many discussions with investors like, what the heck happened? We have a couple of those, but I'm like, even when that happens, I'm like, it's just the business plan is still a 5-year plan. Let's give it some time. Certain things happen on the property. We're going to work through it. And I'm confident it'll get turned around. But, if stuff goes sideways in a bad investment, it's it kind of stays bad.
Yeah. And a lot of the bad investments or riskier investments are really more speculation than they are investment. The apartment communities you talk about,
yeah,
they have a business plan. It's, hey, we do this, this, and that. And you're talking, if they have conservative underwriting, there's a high likelihood this stuff's going to happen. But you're just saying, well, Bitcoin's going to go to 100,000.
Yeah.
That's pure speculation. That's right. You could find reasons to support your thesis. So Elon Musk just bought it or this and that, but there's no business plan there.
Hey guys, this is Jordan Moorhead here, and I wanted to ask if you could do a huge favor for me. If you could go leave a review for this podcast wherever you're listening to it, that would really help me get this into the hands of other people that are interested in information about Austin real estate investing, and I'd be able to help more people. Thanks, guys.
Yeah, no, you're exactly right. I like that word you use a lot. And I'll make one last thing. I was traveling with Dell a lot to Brazil. We were setting up, helping them set up service infrastructure for the factory down there. Great time. Love the Brazilian people. We had a lot of, every 2 weeks for like one year. I was going back and forth. And on some of those trips on the weekends, we have extra time. And we were there in 2 weeks. And we started noticing that Brazil during that time, this is right before the Olympics, when they had the Olympics down there. And the Brazil currency was going up. The real was appreciating, and they were selling. They were an exporting country of raw materials to China and things like that. They had a lot of raw materials so their currency was strengthening. They had the Olympics coming up. They had the World Cup they were hosting. So we were down there and like we were intrigued, and we would talk to real estate developers. And I bought into a deal in Brazil and Ecuador. I bought property, and in Tulum, Mexico, I bought property, and every one of those deals ended up having hair on them. In Brazil, it was a Portuguese company that was building it, and they had a big strike, and the strike went on for a year. I mean, I don't know if you'd have a labor strike in the U.S. for a year building something. I never heard of that, but it was a whole year, so the project was delayed, and we already gave them money. So I'm like, so we ended up selling and getting out of there. Then what happened is they had some scandals and stuff. The currency started dropping. So long story short, on all these deals, if you think about international investing, if I'm on bigger pockets and I see anybody talking about international investing, I always throw up a couple stories because I'm like, that sounds cool, right? Man, I can go see the property. I can vacation. I always tell people, why don't you do this? Go vacation, go rent, vacation rent. And then maybe stay 3 months, and then maybe 6 months. Really get to know the area really well. Understand the rules, the laws, the currency, do they fluctuate or not? The politics, and a lot of these countries will have a coup or change of leadership or change the taxes overnight. And you get no warning about this stuff. And so it's happened at every property in the international space I've had. I'm to a point where I've lost money. I'm maybe breaking even on a couple things, but it's been a wild ride. I'm like, I just love going down to Tulum and vacationing. And I have 5 acres in an eco gated community I've never built on. It's got howler monkeys in there. It's really cool. And we were the only development between us and the beach of about 2 miles, 3 miles. And it was supposed to be this biosphere, and the government said it's protected. One trip I went down there with my wife. Screw it. The local developers came in, made some deal with the government, and they had moved the biosphere over here a little bit, and they were developing all this. So basically, my run to the beach became way out there. And I'm like, well, it's still kind of cool to go down, but I don't know if I'm going to build anymore. It's the kind of stuff that happens. And it probably, some of this stuff probably wouldn't happen in the States. You have protected lands, and it's not going to just be sold. But you never know what's going to happen in some of these foreign countries. I'm like, it's a great example of just not knowing enough, right? Not knowing enough and getting kind of crazed by the excitement of everything and buying into it.
Absolutely. Yeah, no, I've heard of that stuff. That's crazy to hear. All of your experiences have been negative investing. Not negative as in you've lost money, but you just not recommend it to other people.
Yeah. The cooler, the probably the better thing to just turn around and go the other way. Go to Vegas for fun. Go to Tulum to vacation, and don't get caught up in that stuff. Most of the time, I don't think it works out. Too complex.
Yeah. What's one thing you'd want newer investors to know that are interested in looking into projects like syndication? Let's say somebody's saying, hey, I've got a high paying job.
Yeah.
I love my job. I don't really want to go flip houses.
Yeah. I mean, it's ideal for that, right? So it's passive in nature. A good company will want to educate you, kind of what the expectations are, and understand your goals and objectives. Do you want cash flow? Are you trying to retire? We have deals, Jordan, where you can, in multifamily space, where, if you can choose Class A, and we have Class A, Class B. Class B is kind of growth and income, get all the profits. Class A, you get no profits, but you can get like 9-10% yield. And you can. I heard a guy the other day says, I can borrow from my HELOC and get a 3.5 on my equity. He's from Seattle, and I can turn around and invest in this deal and get 10%. I'm like, I can show you why I think it's a low risk investment to get 10%, and you get all the tax benefits. So there's those kind of investors, but most people are kind of growth and income oriented. They want some cash flow, 6, 7, 8%. They want the upside. But I love the tax benefits of this real estate stuff. So it's a good thing to look at. But most people, I want to make sure is we don't do any cold calling. We're not hard selling this stuff. When you see these deals and educate you about them, I think you're going to be like, this is pretty cool. And when I get people involved, I always say be prudent. Start with the low minimum.
Yep.
Get your toe in. We'll get you in a good market. You want to be in Texas? We got deals in Texas. You want to be in Austin? I'll probably have a couple of deals in Austin. But get on our mailing list. And once we have a 30-minute discussion and learn who you are and what's going on, we'll put you on the mailing list. Now you have to be an accredited investor. I don't know if Jordan, you've talked to educate people. Most of our deals, you have to be accredited. You have to be like $1 million net worth minus your personal residence or a certain income, 200,000 or more. But if you qualify for those, then you can get on our mailing list and distributions on deals that come up. And if it's something that's interesting, you just push a button and we'll give you more information. And if you say, hey, I like what's going on, Dave, let's get more. I'm ready to move forward, or I want questions answered. Great. We're really low key on this. We're really low key because it's more about just educating you. If it's right, then we're all about helping you build a portfolio of these different things in different parts of the country. And some people just like Texas, or some people like Texas and Florida because it's no state tax.
Yeah.
Some people just want to be diversified across. And we actually have funds. We have funds where we've got one fund going on where people can, get into 5 or 7 deals all across the country in apartments. And so you can be instantly diversified. You don't have to wait and build. So there's a variety of things we can talk to investors about, but most people I talk to, a lot of people who are new, just need to be educated. What is this all about? So I have blogs. I have a book called Riches and Ditches that teaches people, 25 frequently asked questions of syndication. It's free on my website. I've got a lot of blogs about why I like apartments or self-storage, easy kind of stuff to kind of learn about the space. And then we'll get you exposed to the deals that we're doing, and then hopefully get you in one. You like it, you might want to do more, or tell your friends about it.
Awesome. So real quick for everybody listening that's not familiar, and David, absolutely correct me if I'm wrong here. To be an accredited investor, you either need to make over $200,000 a year as an individual. I believe it's $300,000 a year as a couple.
Right.
Or have a net worth over $1 million, not including your personal residence. So if you've got $400,000 in equity of your house, you can't count that towards your net. Yeah,
you can count rental properties equity. You can count 401k, IRAs, just about anything. Think about a net worth statement. And you put it together. The only thing you're not able to count is really the equity in your personal home. On the income, you're right on, Jordan. You just have to do that for 2 of the last 2 years. So I have some people, hey, well, I just made $200,000 this year. I can accredit. So, well, unfortunately, they look back 2 years, a 2-year look back, and then expectation of going forward. They've toyed around with looking at changing those rules. It's a little bit unfair if you're on the West and East Coast. Higher income areas, you get first line managers could be maybe $200,000 Silicon Valley, right? You're in Iowa, it's maybe harder to hit 200,000, just the cost of living and the salaries are. So there's been some discussion around that. I haven't seen anything yet. But that's the primary way. The less known area is if you're in the securities industry already, There are some licenses out there. I think it's a Series 7, a 65. You're accredited just because you're in the industry. But yeah, that's the primary way to do it. And there are some deals out there. I have a deal. There are some deals out there that come up from time to time where the operator, it's called a 506B deal, Jordan, not to get too technical, depending on where your audience level is. But on occasion, we have deals that allow for non-accredited investors, as long as you're sophisticated. So we educate you, we kind of understand what your business background is, what your investing experience is. But and operators can take up to 35 non-accredited investors in those deals. So I wouldn't totally discourage people like, oh man, I'm a light years away from that, or I'm close to that, but it doesn't sound like Dave's really encouraging that. I'm like, I would say 95% of our deals are accredited. But if you're close, or you're, this really intrigues you, there's probably a deal or two every year that we could probably qualify you in as a non-accredited, sophisticated investor. Yeah.
Awesome. Okay. What's your best advice for people looking to invest in Austin? So you said you stopped buying houses in Austin in 2015.
Yeah.
Let's say somebody's looking to get started investing in Austin here. What would you tell them to look for?
Like if you're investing like single family homes, perhaps, or just general investing.
Yeah. If you're going to invest passively with one of you guys, or you're going to buy a duplex here, or whatever you're going to do. Yeah.
Well, this is my own personal experiences, right? So, take that with what it's worth, right? So, in 2015, I stopped buying single family homes because I just wasn't seeing the cash flow. Now, how I was buying it, I didn't want a lot of problem with my property. So I bought in good suburbs, good schools. At that time, Jordan, back in 2012, I was probably buying $225,000 homes. Those things are probably worth $350 now. But, so to me, as I got into 2015, those homes were getting up to 275. I'm like, and I wasn't ready for, gentrifying areas or things that would cause me a lot more work. So I wanted homes that were kind of 10 years less age at the time I was buying. So, I was buying, like in Terra Vista is a great community. I think that home that I bought back there was maybe a 2010 home or something like that, maybe back then. But, I really didn't want to have much problems. But, other people, I know one of the biggest wholesalers here in town. And so if you're looking for more affordability and that kind of thing, maybe that's a person to contact, and kind of learn about, if I want to get more active, like if I'm a flipper or things like that. I just encourage people to get involved locally. This is great. You're doing a podcast kind of geared towards Austin. But when I first started the business, I went to multifamily meetup groups or flipping groups. Go to meetup.com, look at real estate and see all the groups and just start going and attending these different things. You may not know what you want to do yet, but certainly you're going to meet a lot of contacts here. And that's the benefit of the local meetup groups, meeting contacts and finding out who the big players are and who may be looking for partners and and that kind of thing. And then you might just find that niche and start working it. But I stopped buying in 2015 because I just thought mine was a buy and hold strategy. And I just thought, I'm not really getting the cash flow anymore. But now in syndications, I'm okay buying in Austin because our apartment syndications value add, I tell people, are slow flips. We are flipping. It just takes about 2 years to renovate a 200-unit apartment. If it's 95% occupied, when we buy it, we say typically there's 200 units. We only have 10 vacant to renovate on day one. 30 days later, we're kind of like a pancake. We're moving people's leases that are expiring. Hey, you want to stay? Look at this brand new thing we just fixed up for only $75 more or $100 more. Like, oh yeah, I don't want to leave the area. My job is down here. My kids are in school. Their friends are next door. Shopping's right up the street. Why do I want to even move? So, okay, it's a good value proposition. Move them over. Well, then we start renovating theirs. But it takes 2 years to do that. And if the market's good, then in 2 years, we sell or we refinance or if it's not good, we're going to hold on to it. So I feel like when you are flipping a property, you can make more profits than a buy and hold. Okay. Because I can literally flip 2 deals in a 5-year hold period. And my IRRs, I'm targeting IRRs at probably right now around 14% is even challenging to get in Austin in apartments right now. But that's what we're looking at, about 14% IRR on these deals, and probably mid to mid to higher teens, kind of over a 5-year hold. We're typically out of them in 2 or 3 years. But yeah, I mean, I can't really, I know Austin's appreciating crazy right now. So people who are buying single family homes and flipping them, months after they bought them to somebody else are like, well, I can make more money doing that. But it's going to be a relatively short time this happens. As much as I'm optimistic about Austin and what's happening, and we're underhoused and everybody's moving here, you never know what's going to happen. Even the big freeze kind of freaked me out, right? So the big freeze that happened last week, I told my guys, we're looking at San Antonio, if this thing goes out a month later, it's going to be better than we go out a week later on this deal, because investors have a short-term memory. I tried to do a deal in Orlando, Florida, with an apartment with a really experienced operator when Hurricane Dorian was scooting up the coast last year or a year and a half ago. And it was like, it was one of my worst capital raise experiences ever, because every day on your phone, on the news, look at Dorian, it's going up the coast. And I'm like, Dave, where's this deal? It's right there. This is about maybe, not too far from Dorian right there. So people's memories are short, but that shock to us last week, maybe made a few corporations rethink coming to Texas. I'm telling you, maybe. Now, if you say it only happens every 40 years, and do we even want to spend any time worrying about this stuff? There's that camp. Or should we do some kind of modest improvements or a complete overhaul so we're always reliable if we go to whatever temperature we go to? So what does that tell you? It tells me that you're never safe anywhere. You better have a diversified portfolio. And if you think only Austin, Texas is the name of the game, anything could happen. I used to tell investors, we're like, who's a kid? What's the guy in North Korea? He actually told us that he was going to shoot a missile over to Austin. And I said, it's probably seriously unlikely that would ever happen. But if something like that happened, is that a black swan event that you would never thought happened? Who would have thought COVID would have happened? Right? Now, COVID's affecting every place. But what if COVID was only in Wuhan? What about apartments in Wuhan? What if COVID was only in Austin, Texas, or Texas, and you just only love the Austin, Texas market? All I'm saying, I love Austin. It's going to be great. If I'm overweighted here, I feel that's where I want to be overweighted. But this is where I think syndication comes in. I want to be in some different niches. I want to be with some different operators. I want a Bernie Madoff going on. And I may want to be in, some different geographies, because who knows what's going to happen with Hurricane Harvey next, or who knows, So anyway, I can go on. Probably time to wrap it up. You just Jordan's like, I think we got to get this one wrapped up.
No, I think you've got some good advice. I think you can be diversified against among different parts of the real estate asset class too. Yeah. So, you talked about, you have single family and those sorts different of things over here. Yeah. And then you've got passive investments in apartments over here. So, we talked about diversifying different areas. I don't think it's a bad idea to diversify with other operators. So, if you're operating yourself, maybe you've got somebody else you invest with. I do that.
Yes. Yes.
I just get checks every month from those guys. I don't have to do anything.
Yeah, that's right.
So, pretty nice.
That's right. Yeah, that's good. That's good. And inside, like a lot of people, my thinking on this is, at the end of the day, as you get older, you tend to be more passive. That doesn't mean not passive about life. It's just you tend to want less complexity in your life. And you don't, you're kind of downsizing the work. You've done the work, and now you want to kind of enjoy your work more part-time, maybe some volunteer work, maybe more time with your family, whatever that is. It's easier to unwind. Like I said, if I have a bunch of passive investments, if I don't feel good one day or 1 month, or, God forbid I get hit by a bus early, I know my wife's still going to get the check. So there's a little bit more risk in my do-it-yourself approach. Obviously, she's managing it. If something happened to her, I'd be like, oh, crap, I had to manage it. No, but I don't think about it like that. But I'm like, really, when you think about it, it's like there's lots of things to think about in the world of investing. And it's so easy to kind of get enamored with numbers and pool factors and stuff like that. But, maybe start small in a lot of these different areas and, learn from experts I think you'll find it's okay. Listen, it's okay to lose some money. Some people just have to lose money, or you just have to go through that experience. I was telling my daughter going to UW, if I sit back and think about me paying out-of-state tuition for you to go to University of W, she's in Austin here, UW, and you can't even go to class, and there's COVID going on, and I'm paying your apartment and your out-of-state tuition. It makes absolute no sense. Mm-hmm. But she's a 4.0 student. She's a wonderful person. She's really accountable. And we had a discussion. I'm like, I want you to go experience that. It makes no economic sense. Maybe from a safety thing, but I'm like, her whole senior year was screwed up because of COVID. Like they missed their whole graduation was delayed 2 or 3 months. And then it was kind of like nobody was in the stands. It was just, everybody went through that. That's not my kid. Okay. Then her senior trip everybody was paranoid about getting 5 kids together. They had to quarantine for 2 weeks. They ended up going down to Galveston, which is the most coolest place in the world. But, when we kind of chaperoned down, we hung out. But I was just looking at that whole experience and like how resilient and all this stuff. And I was like, I just want to give that to her, right? I want to give that to her. And I, even though, it's the same kind with investing. I think sometimes you just got to I can tell you all day long not to go invest in Tulum, Mexico. Someone's going to tell you they can make a ton of money down there. Yeah. I had a poor experience, and I had 3 experiences were poor. And until I finally learned. I had to have 3 experiences before I finally learned. But as I do more and more now, I'm sitting back telling the younger people, I would go this way, I would go this way. But some people still have to make their own mistakes. And at the end of the day.
Yeah, I think so. And I think you bring up a larger point too. People can listen to podcasts all day, but at some point in time, you just have to get started and start learning that way, because you really learn so much more when you're doing it. Absolutely.
That's powerful, Jordan. That is powerful. I tell investors who are kind of hesitant to get in on their first deal. I'm like, this whole you learned all this stuff, but until you actually got into it, experienced us giving you reports, seeing money come into your account, reading the reports, kind of understanding. Maybe you can go to the property if it's close by. Until you actually did this, you couldn't even experience yourself as a passive investor. You can't even experience it. You don't even know what this is all about. Start small, touch it, see how it goes. If it's an active approach like you've done, Jordan, which is great, you got to do it. You can't just read about it. You got to do it. The people that, quit their job, go all in, and there's people out there like that. I certainly quit my job, but I definitely have my family in a really good position to do that. Mm-hmm. I admire people that do that and it works out, but it's also too, you got to really kind of weigh all that. What, your environment, your family, your friends, what your lifestyle going to look like. I think there's a lot of things you can try without, maybe giving up that full-time job right away before you decide it's, this is your cup of tea. Then you can always burn that bridge later,
Yeah, no, I think that's good advice too. Everybody wants to just quit their full-time job, but a lot of businesses need to be started on the side. And when they exceed your full-time income, then you make the jump, or even when they're close. But it doesn't really make any sense. And for at least the active side, when you're not investing, you're not going to get very good deals in your inbox. But when you're actively investing and working on it and telling everybody about it and showing your success, you're going to get a lot better deals than the guy who's never done it. So I get a lot better deals than I did in the past because I've been doing deals for 4 years now.
Yeah, that's right. It took time. You probably missed some opportunities and you maybe lost a little money here and there. Hopefully you didn't too much, but and you learn them more by the losers, right?
Yeah. Oh yeah. The mistakes are big. They're
That's right. Yeah. That's right.
So David, we talk a lot about books on here. What's your favorite business or mindset book you like to recommend to people?
Oh yeah, there's a lot of good books, and it kind of depends on my mood at the time. I got a bookshelf here. I should have probably put one out. One will pop up to me. Okay, I got one called Deep Work by Cal Newport. I don't know if that's been talked about before. That's probably something that I really resonate with. It's easy to get up and get caught in your email and start running. And then at the end of the day, you're tired, you look back and you're just stuck in your email box and doing stuff. You're getting pulled in 25 different directions. And you didn't really spend some time working on yourself. And this is covered in a lot of different ways, but this guy had some amazing success. And really what he just did was he carved out quite a bit of time. And maybe you can't do it initially, but he carved out quite a bit of time, like a couple hours a day in the morning. I think I got up to like 8 to noon. he was just focused on like personal development, research. He was a professor, so he was doing all this kind of stuff, and he had all these kind of awards and everything else. But he didn't work all the time. What he found out was he just had when he had the time, he really focused. He didn't listen to his phone or get distracted by anything. He found time. And I think it was Thoreau. There's a bunch of people he talks about in the book, but in the older days, we weren't so distracted. So it was not unusual for someone to go write a book. They would go off to a cabin somewhere or up in, Matthew McConaughey. I want to read his book called Green Lights.
Really good.
He's from Austin. Have you read it? Yeah, I heard about it. I want to read it, but he's talking about, he went to Hawaii and where he's, he needed to get away to kind of write this book. And, that's really missing in our life these days. You don't really carve out that time, but it's a really worthwhile book. And what I was impressed with is that he had more time because like, he's even talking about listening in the evenings. He puts everything away. When he gets home, he's done. Like he's not doing stuff for work. But he was producing some tremendous high quality work and very productive work at a really high pace for his where he was in the professorship arena. But and he was there for his students. But at nighttime he was like listening to he was in DC. He's listening to a Senators baseball game. Now, have you tried to watch or listen to a baseball game? And I'm not trying to upset any baseball. I played college baseball, so I love baseball, but I haven't really watched the baseball game in a long time. I think it would be really hard for me to sit in front of a TV and watch it. Going to a game would be much better, but with COVID, so like if I could try to watch a game, it would drive me kind of nuts. Like besides the commercials, it's just slow. It's like really slow. But his analogy was, listen, like you really kind of relax, like really relax your mind and your body and kind of enjoy the game, the strategy, the simple strategies of, pitching it wide to, get this runner on base. And I brought it back to my memories how much I kind of missed baseball because he slowed everything down. He was able to really appreciate life. And so my wife and I are trying to do that with like little simple routines in the morning to kind of get our ready. So we have a lady here in Austin. Oh gosh, I should give her some fanfare. There's a lady in Austin. She's famous and does yoga stuff. Adrian's her name. She's all over YouTube. And so we do her little 30-minute thing in the morning and we do it together. My daughter's staying with us now. She works for Disney in LA, but she's been with us in COVID. So she's involved. Her boyfriend comes out. Sometimes we'll have 4 people in the hallway doing this yoga in the morning. And we always it's kind of regular, like 30 minutes, and then we're off doing our own thing. But that's the kind of stuff I think we're really missing. A lot of people are missing their life. And when I don't do the yoga, I don't carve out some time, like the deep work stuff, then I just realized I haven't worked on my most important thing, myself, my energy, my health, my mind, my spirit, all that stuff. If I just run through the week and don't carve out that time, it's a different week. I get to the week, I'm tired at the end of the week, and I don't feel I got stuff done, but it was busy work, right? And I move the ball. But I really move the ball in my business when I carve out that hour or two to really think about my goals and how this is all coming together and all that stuff.
Awesome. I have not read that. I have that book, so I need to read it now.
Yeah, it's a good one.
Awesome. So David, how can people get a hold of you if they're interested in learning more about your business or just talking to you about real estate? Yeah,
we have a lot of Austin people. So I'd love to, when COVID kind of slows down here, we get people out having some coffees again. So I used to like to meet people. But certainly David at ThompsonInvesting.com. It's all one word, THOMPSON investing.com.
Okay.
The website's the same, ThompsonInvesting.com. You can get there, and you can download some free stuff on my website. You can see some of the projects we've worked on, and I've got a lot of blog articles up there to kind of get you up to speed on what we're doing, or if you're interested in a specific area. And I've got 2 downloadable ebooks, one called Riches and Niches, The Passive Investor, and one called How I Raised $1 million in 2 weeks. It's more for the people who are interested in capital raising. So I've got a couple of books up there. Ebooks you can download for free. But anyway, I'd love to connect with any of you guys. If you're here, especially in Austin, let's take advantage of that. And I appreciate the time, Jordan. It was great.
Absolutely. And we'll have all that in the show notes too. So everybody look in the show notes for his website and his email. David, last question, probably the most important question we ask. What's your favorite restaurant in Austin? Back when people would go.
Yeah, this is going to be, it's Whataburger. Is my favorite, I'm not a real I love food. I'm not really don't like There's not probably any food I really don't like. Rudy's is close to me, and I like Torchy's tacos. I'm not opposed to fancier stuff. I just like, Franklin's would be wonderful. I have takeout from there. Franklin's barbecue is famous, and I like Black's barbecue. I'm more of a barbecue guy when I can get out. But it's funny. The other day, my wife was like, "Well, you need to get out. I don't feel like cooking tonight or whatever." I'm like, "Whataburger's fine. I'll just go get some." So I'm pretty easy, but Torchy's is great. Rudy's is easy. Just pick up the meal and come home. So with COVID, it's kind of changed where we go and stuff. So I know this stuff for most of your foodies out there, like, oh, he's hurting my ears. But I like things that are close. Always treat me well. So I'm pretty simple that way.
Yeah, Rudy's is great. Rudy's and Black's both, but Rudy's, there's a bunch of them around the Austin area. Really,
like five or so. Yeah, and unfortunately, they're going out of state, which Torchy's is doing too. And I'm sorry, I don't like it. I don't like that. I just want to keep that Austin, Texas image. Or I'm okay about Texas, but if I go to New Jersey and find Torchy's tacos, it'll probably upset me.
Yeah.
Unless I'm looking for Torchy's tacos,
you'll be happy.
I'll be happy. That's right.
The curse of having such good food here, I guess.
Yeah, there you go. What's your favorite place? What do you like?
I would say probably my favorite easy place is most likely Rudy's. My favorite just place in general, I would say, has to be Red Ash downtown.
I've never been there. I'll have to
it's
check
really
it out.
good. It's great. Yeah, so you should try that out. Well, great, David. Thank you so much for coming on here. Everybody's David's information will be in the show notes, so make sure to check the show notes for his email and website. I really appreciate it. I look forward to seeing you once we're all out of our houses.
I can't wait. Let's get together soon, Jordan. I appreciate it. Thanks for the time again.
All right. Thank you.